This is our Forex blog for April 19th, 2013. And one of the best ways of using our software and easiest trading systems for Forex is to use our currency indexes. It lets you see at a glance what the trend is of any individual currency. For the last 6 or 7 years, we focused on creating currency meters, which showed you in histogram form what the trend is and how statistically how strong the dollar is, or in this case weak. But it's much easier to just simply look at a chart and see it, and you can see the previous day's high in dotted green, previous day's low in dotted red, the point of control, which is where most traders have positions in the dollar, in all the dollar pairs, and it also shows you that the point of control went up 33 pips yesterday, so yesterday was an up day. If you see a false breakout down and it comes back into the previous range, or it busts from below to above the point of control, these are all events which can cause high probability trades. And the real key to trading is small losses, big wins. Don't worry so much about the percentage of wins versus losses. Focus more on what things cause huge wins when they work. And typically when a currency has a reversal pattern or a continuation pattern, or in this case a pullback, the Swiss is going up, it pulls back, it finds support at the 15-minute bars moving average, hourly bars moving average, and the point of control of yesterday. Very strong. You can see the daily trends for the most part is up, the weekly trends up. When it starts to go back up here at 9 o'clock, you want to buy it, and you want to buy it against whatever one is weakest then, which might be the Australian, the New Zealand, the CAD. At 9 o'clock, the pound went from being very strong, and it went through the hourly moving average right here. So those are the things that you want to do. Let's take a look earlier in the day. Let's scroll back and just kind of go through this. When a currency goes from below to above its previous day's high, and you get a pullback where it finds support at the previous day's high or any other support or resistance area, the 15-minute moving average, hourly, or even the point of control, when it starts to go back up, you want to look to buy this one right here. Now the daily trend's up, the weekly trend's pretty weak, so you got to be aware of that. A lot of traders lose money because most people know you want to trade with the trend, but what trend? Real-time trend, hourly trend, 4-hour trend, daily trend, weekly trend, monthly trend. Which time frame trend do you trade with? Well, if you're short-term intraday traders, you get in and out of positions the same day. Basically, you want to trade with a real-time trend, and hopefully a daily trend matches it. You also would be advised to pay attention to what the weekly trend is, because weekly trends, when they go to our statistical likely reversal areas, are more likely to reverse. But you can certainly buy this. You tend to make less money when all the time frame trends don't line up. So the weekly trend's down, you got to be real careful. When this finds support and starts to go back up right here, which one looks weakest? Well, the yen is underneath the previous day's low. The dollar came down to the previous day's low and then bounced. At this particular time of the day, the yen's the weakest. So we would look for an Australian yen buy around 3. It's that simple. Now you can use tick charts, range charts. A range chart is just simply a certain number of pips per bar, like 4, 5, or 6, depending on the currency. But let's take a look at the Australian yen coming up to 3. Let's go back here and make sure. Okay, so it busted out from below to above the previous day's high, came down and found support at 3. The yen actually broke down underneath its previous day's low at 2. So you really could say at 2 o'clock the yen is super weak. Which one do you really want to trade it against? The pound wasn't really that strong then. You could have bought the CAD yen, you could have bought the New Zealand yen at 2, because this one went above its point of control. This one was already above its point of control. At 2 o'clock, this one went from below to above its previous day's high. So 2 o'clock is the ideal time to trade, because this one's breaking down and making lower lows today than it did all day yesterday. And this one's making higher highs as an index than it did all day yesterday. And all this index is a synthetic chart that I create based on the prices of all the Australian pairs, all the Swiss pairs, all the Euro pairs, all the dollar pairs. It's probably the top reason why you want and need our software. Once you learn how to trade this way, you wouldn't be able to trade without it, or as successfully, I should say. But here's 2 o'clock when the Australian was breaking out. Um, you know, you can see it went above the swing high right here, went up, hit our upper containment band. You might have made 35, 40 pips there. 3 o'clock, you're looking to buy this. You have a nice little pullback right here. Our perfect oscillator went underneath the lower Bollinger Band. Usually when they pop back up right here, that's the place to get in. If we look at that bar, that would have been right there, and it went up almost 50 pips. And that's the power of our indexes. You're really in the ones most likely to explode. And you're also in the one where you can see double tops, double bottoms, you can see flag patterns, you can see trend line breaks, you can draw Fibonacci areas on it. You can do so much stuff. You know, for example, the pound, you know, went from a very strong uptrend to a downtrend. And if you drew your trend line underneath there, you really saw the beginning of the downtrend start at 430. While other traders are looking to possibly buy pound pairs, you're looking to sell it. And you really don't know it's going to continue down unless it really stays underneath the low of this swing. It tried to go back up, failed to go back up to the previous high. It's kind of chopping around here. But when it's underneath that level, you can take a stab at it. You might have had a small loss here, break even, and an absolute huge win at 9. So at 9 o'clock, which one was the strongest to trade the pound against? Well, the dollar went from underneath to above its hourly. The yen, while it looks like it's going above its hourly soon, possibly, it's underneath yesterday's low, so you wouldn't want to do that. The euro looks very strong. The Swiss looks pretty strong. So really, you would trade the pound against the euro, the dollar, and the Swiss. So at 9 o'clock, we're looking to sell the pound dollar. And take a look at this, 9 o'clock. Here's 9 o'clock, and it's still above its hourly moving average. But if you got short right there, you might have made 5 or 6 pips. Comes back up. If you went short here, you got into the next trade early. Or if you waited for it to break its hourly, you're short right here with your stop very close. You want to keep your stops less than 10 pips. And this just absolutely, you know, went down. I would have probably got out of my trade right here. Anytime it's underneath the lower band, it typically reverses. But just an amazing trade. So that's the euro, pound dollar. Let's look at the euro pound. Euro looks strong, the pound looked weak. 9 o'clock, let's take a look what happens. Here's 9 o'clock. We had a false breakout above the hourly moving average, and then it came back down. And at 9 o'clock, we were watching to buy this. You wait for it to go above that high. You got in right there with your stop right here. And, you know, this is, even if you got out right here, this is what you risked, and this is how much you made, and it's 3.5, 4 times bigger, even though you didn't catch all the move. I mean, typically, when it kind of stalls up here, you might want to put your stop underneath these lows. When it's above our 2.0 white band, typically you're going to wait for it to go below the previous bar's low and you get out. So you might have even got out here. If you did that, you had, you know, maybe 5.5, 6 times bigger win than loss. And last but not least, what was the third one that was strong? It was the Swiss. So at 9 o'clock, the pound Swiss is an excellent one to be selling. And guess what? Came down and found support at the hourly, went back up, was not able to get above these highs. That's very significant. And then at 9 o'clock, you're watching this. If you were using our software, you might have even given it a shot right here, saying, well, if it comes down to this previous swing low and finds support and bounces, at least that win, or the smallest likely win, is bigger than what I'm risking. If your potential profit target is 1.5 to 2 times bigger than what your risk is, you got to pull the trigger. And then you can see that this one just absolutely collapsed. If you got out here at the lower band, this is how much you made, and this is what your risk was. So you can see in this case, you know, you go 1, 2, 3, 3.5, 4 times bigger win than your risk. You made 10, 20, 30, 40 to 45, maybe 50 pips and risk less than 10. That's the beauty of using our currency indexes. And there's so much more that you can use. There's all kinds of patterns that work on this. One is a little sideways rectangle pattern. you can draw trend lines going up, take those trend lines and project them off of the high, and you can also draw our trend line tool on this, and then when you move your cursor, it automatically takes that slope, and basically you can look for reversals when it gets into the upper quadrant, right here and right here. What amazing predictive ability you have for kind of an extended move likely to retrace. You also have pullbacks. Anytime a currency makes a higher high and pulls back, you want to look for buys, especially when it's at support. So this one I wouldn't even consider a strong move. It kind of inches its way up. But here it shot up and then it came down and found support. That's a very high probability trade. This one right here broke above the previous day's high, came down and found support. Great place to buy. This one finally broke out of a narrow range rectangle pattern, and it really didn't move that much earlier. Let's take this one right here. Here's your first pullback. To the downside, the euro broke, or the dollar broke previous day's low, then found resistance. This is the first pullback trade that didn't work. It shot up, found resistance at the point of control, but this was been going up for hours. This is really the first decent pullback right to the hourly moving average in the previous day's low. Support resistance is phenomenal for trading these. You can see the CAD found resistance at the previous day's high, and then when it finally made a decent sized move of the day, it had a counter trend trade up right to the hourly. And keep in mind the CAD, the daily trend's down, the weekly trend's down. So at 6 o'clock, which one was strongest? That would be probably the Australian or the New Zealand, because both of them was above the previous day's high. If this one's going down and the New Zealand and the Australian are just going sideways, you can still make money when one currency's moving and the other one's going sideways. So let's take a look at that. 6 o'clock, you sell the CAD versus the New Zealand or Australian. The Australian and New Zealand are on top. So at 6 o'clock, we're looking to buy the Australian CAD. And remember, those two went sideways. Here's 6 o'clock. You might get long when it goes above that bar's high. And it really doesn't go up that much, maybe 10 pips max. But the point is, even though the Australian against all other currencies was going sideways, this one kind of worked its way up. It never really would have hit your stop, and you had plenty of opportunity to get this with a very, very tiny win versus a loss or break even. So when you use our currency indexes, usually the worst case scenario when you're in the trade, here's 6 o'clock with this one. Maybe you got long right here, your stop was underneath here, kind of went up a little bit. Might have hit your stop, you might have had a loss in this one, but you had an opportunity to make something or get out near break even. And anytime you're in a currency trade where, let's say you want to sell the CAD here, you're hoping that this one finds support and goes up. As you go sideways or forward, if the thing's going sideways, which both of these are, you probably would have got out of your trade. This one's falling, but these are going sideways. You're going to be out of that somewhere within an hour, probably at break even. Not every trade's going to go your way. So again, I'm going to just kind of highlight some of the best trades today. Anytime you have a big explosive move and a pullback, very high probability. Anytime you see a currency in a multi-hour rectangle pattern that breaks out, very high probability trade in the breakout direction. You have the same thing here. You have been buying the Swiss there, and this, by the way, is a pullback trade. You would say the euro breakout of earlier was also very good at 8 o'clock. Let's take a look at that one, because everybody likes trading euro pairs. You want to trade the euro versus one of the ones that's weakest. Well, obviously the yen, just absolutely weak. The dollar is kind of inching its way up. The yen is just going sideways. So at 8 o'clock right here, you want to buy the euro yen. Probably going to make 20 to 40 pips on it. Alright, so this thing's been trending up all day. 9 o'clock we're looking for a buy. You can see our perfect oscillator went underneath the lower Bollinger Band on it. Typically I will buy when it pops out of the other side of it right here. And you can see that's somewhere around in here. You might want to buy it right here when it goes above the previous bar's high. Put your stop here. And you had to wait 15-20 minutes and then it popped up. And you can see it went from around 75 to 80 all the way up to 130, maybe 10-15. So you easily made 25 to 35 pips on that trade, and the trade worked relatively quickly. And looking at this from 9 o'clock, let's go back to the indexes. If you're in that trade, or it's actually even, I think 8 o'clock, let's go back to that chart. I was wrong. 8 o'clock is when you want to start looking for buys. So here was the breakout to the upside. Your stop was right here. Typically, if it goes up a little bit and comes back down, I'm going to move my stop up. You might have lost a little bit on the first trade. Second trade popped. And let's go back and look at this at 8. Here is going up. You can see the yen is also going up. And the euro was above the previous day's high. It's kind of got a little flag pattern right here. You can see it fell underneath those bars low. So exactly at 8:25, you'll be looking to get out of that trade. So let's go back and look at 8:25. That's right here. At 8:25, you're watching those two currencies like a hawk. If you bought that breakout right here, guess what? You're still up a little bit on that trade. The index, the euro, started falling on the index. It failed to go higher, and the yen was also shooting up. So you're not going to leave your stop here and get whacked when you can get out near break even. I typically don't always move my stop to break even in this cases. I might keep it 4 or 5 pips underneath it just to give it a little bit more room. Sometimes there's nothing worse than having it come down, stop you out. You don't get back in and shoots up 50 pips. So I'll always give it 4 or 5 pips. So I'll be out right there. The point is, when you're wrong, you lose tiny, tiny amounts. So as we scroll forward on this chart, we got into the second trade. Guess what? We lost super, super tiny amount. And then on the second trade, we probably made this much, 2.5, 3 times bigger win than loss. And that's the key. It's the only thing you need to focus on as a new trader.